Let's talk to Eddie Tofpik. He is the head of technical analysis and senior market analyst for ADMISI. Very good morning to you,
Good
Eddie.
morning.
Right, Bitcoin. What can I say? Fast markets, grabbing the headlines. What are your thoughts?
Right. Let's take something which is an operational issue as such. And last day or so, we've seen the first settlement of the futures contract, the closing of that. So this cash market has been in a backwardation compared to the futures, which means that this cash market has actually been higher than the futures markets. And the futures markets are coming in towards settlement. So obviously they're going to meet at some point because that's the law of nature. They all will eventually turn up at zero. They all together, the same price. And that's part of the reason why we've seen this pullback in the market in Bitcoin. And if you look at some of the holders of Bitcoin, they've been institutional ones, hedge funds, etc., who have sold it. And that's where it's really come through, that the futures markets, which I've said all along, has been the reason, the most bearish reason you've got, which is literally you've set up a futures market. You can sell. Okay, it may not be the easiest way to get around it because there's all sorts of restrictions and margins are quite high, but it is allowing you to sell, and it allows you with a trusted counterparty. That being said, what we've seen here is an unusual pattern. It's a bullish to query line pattern, which is not dissimilar to a bull hammer. So you've got an opening, big move down, and then a close
Snap
up
back
near where it is. But the difference is it's not right at the top. It's a little bit down from it. And the reason I'm looking at it as that is because there's a huge, long shadow on the downside and a big pullback up again. And I'm concerned that that actually could turn the market around and push it back up. The thing that's running this market at the moment, as you can see, is two things. One is that lovely Andrews pitchfork line, the upper tine giving you the angle of attack of the market, and the middle tine showed you in the past where the attack was as well. And the fact that this whole action until the last 3 days could be a descending triangle. If that is the case, then we're talking down about 5,000. But it's not. I haven't marked it because I don't necessarily think so. We have a number of key factors. One, we closed below 11,313, which was a key move from September to the high in December. That was key. We've had two closes below that. Yet, this recent, the absolute Fibonacci, the whole from zero to the high, is at 9837. We have not closed below it. We touched and went below that, went to the next fib, and then turned right away around again. So it's not confirmed. There's only that one close below one Fibonacci.
Okay, so it's a very simple question. Technical analysis is, one of the concepts is that everyone's looking at something the same way. Okay, Bitcoin, are they literally picking levels out? Are lots of people trading this on the technicals?
The point of technical analysis is everything is in the price. You can actually add a volume, but since when we're using cash market, well, you don't know actually really what the volume
what's going through.
Well, you could use the futures, but that's just one side of it. But everything is in the price. They're all looking at that and saying, okay, they could use the same chart levels I am, and I'm giving you where the support and resistance levels are. Should they trade on that? Well, where's the supply and demand from the fundamentals? Is there suddenly a GDP for it? Is there a dividend on it? Is there a yield on it?
The only way you can trade this is using technicals.
I think the only way you can trade anything is using technicals, but then you know me. But on this particular instance, I'd say the technicals have always worked on this in the past. So I've done projected Fibonacci levels, and they've hit them on the nail again and again. It's been brilliant the way they've done that. And on this side, we're looking on the downside. I mean, this market, all it's doing is coming into neutral. It's not gone from bullish to suddenly absolutely atomic bearish. No, it's coming into neutral. We have just gone underneath the short medium moving average. We're miles away still from the medium moving average and long way from the long. We're just coming into neutral. This is a heavily overbought market which has just let off a little bit of steam. Doesn't mean necessarily this won't go back up again, but there's nothing at this particular point. Everything I've got there drawn is, apart from that Takuri line, is saying pointing downwards. So I'm giving you the option that the upside is because of that one action yesterday. The downside is everything up to now has been pointing down. So it's key where it closes tonight. If we do get a close, say, below yesterday's action, then I think, and that I haven't got that on the chart, but if we go close below yesterday's action, then that is a confirmation to me still that bearish Andrews pitchfork line is still in operation. That's still giving you the angle of attack. That's giving you, pointing you where it's going. It's not like literally going that. That's the direction, rudely with a finger.
On that note,
Rudely
Eddie, we
finger.
run out of time. Thank you very much indeed.
Thank you.
Thought-provoking as always.